Welcome to NxGen Podcast, where we discuss with the leaders, innovators, and change makers who are working towards sustainability, building more impactful world. And today I am sitting down with Miss Smith. She is the founder and a CIO of Beyond Impact, a venture capital firm who's investing in animal-free food, cruelty-free innovations. It's a great to have you here, Miss Claire. What
I'm very happy
inspired
to be here.
you? What inspired you, or what was the moment that led you start the Beyond Impact?
Okay, so I had quite a traditional career in finance for the previous 30 years. So I started this fairly late in my career. A lot of that was to do with family reasons, etc. But I'd spent time in investment banking, investment consulting, and at a certain point, I really wanted to do something more fulfilling. I realized that some of the investment strategies that I was involved with were not good for the planet. And I will say on the investment banking side, I was brought into contact with coal companies. On the investment consulting side, I was dealing with hedge fund managers that were investing in distressed, including fossil fuels, coal, etc. And so it became very evident to me that the traditional finance sphere was not considering sustainability, that it was only considering how to make money out of these industries. So that created something of a dilemma in terms of my professional career, because for my entire adult life, I had been concerned about the environment and also the cause of animals and animal welfare. And that had led me to take a lot of steps in my personal life to avoid my own personal damage to the world. And so when I was thinking about this, I came to the view that it was all very well me doing all of this in my personal life, but if I wasn't incorporating that into my professional life, then I was losing an opportunity to have the maximum benefit that I could, and also get other people involved in what I was doing. So that's why I decided to create Beyond Impact, and also the overall platform Beyond Investing, and our technology platform, which is Beyond Animal.
Okay. As the CIO of Beyond Impact, so what specific traits or qualities do you look for in founders who are building animal replacing businesses, startups?
Yes. In terms of founders, there are various, obviously, professional aspects of their background, their qualifications, their understanding of the science, the fact that they managed to develop some interesting new technologies. So everything that we're involved in is has a technological basis to it. But in addition to that, they have to be able to understand the commercial realities of the world. I will say that in this space, and possibly in other very science-heavy spaces, sometimes the founders seem to perceive that they are working in a research facility and are see the outcome as being improving the technology without necessarily a great understanding of how that technology will be used and what the best market is for that technology. And this is aggravated even further by the fact that in order to commercialize these technologies, the choices that you make have a huge impact on what amount of capital that you need. So if you want to go directly to the mass market, then necessarily your production volumes need to be enormous, but you need to raise a lot of money in order to get there. So founders that are very conscious of these commercial realities, that are quite careful with the money, let's say, and only spend to the degree that the advantages that they're getting technologically are improving the product, but improving the yield on the product, improving the economics of the product. So I think that's been a key one. I mean, other things about background, obviously, like whether they have been involved in startups before, if they've had any successful exits. But a lot of founders in this area are really very young, and they wouldn't necessarily have had that kind of experience. So you've got to try and see whether they've really understood that they need to create a business out of this. It's not just a technological exercise.
Okay. So you are a vegan impact investor. So if we talk about any moment like in your life, was there any moment that moved you to, from traditional finance to becoming focusing on vegan impact as a vegan impact investor?
Well, yeah, like I said, the whole sort of story of first becoming vegetarian, which I did when I was 15, and then becoming vegan, which was about 20 years later, was a constant in my life. And it wasn't until I really started to consider how I would put together investment programs in this area. And obviously, if I was going to leave my job and start another job, I wasn't necessarily going to go into fashion, or I mean, I actually did try fashion and catering, but you can't suddenly switch, do this huge leap into an operational area that you know nothing about. So it was always going to be some kind of investment business. And I became, and when I looked at the sustainability space, I was like, oh my God, animals are completely missing here. And I'd even figured this out a little earlier, a few years before, when I'd been looking for ways to invest my own pension assets. And it was very obvious that while having scoured, I could not find any funds that claimed to have any kind of vegan principles or, taking into account animal issues at all. So it seemed to me that there was like a personal pain point. I couldn't find it. I knew other people who were vegan. They must have exactly that same pain point. So the idea of creating funds that had a vegan philosophy made a lot of sense. And the only way to change the food system and other systems, which are where animals and their bodies are commercialized, was to identify other ways to make those products. So that was the real kind of light bulb moment, that my personal philosophy was something that was not being considered in investment products. And also through those investment products, there was the possibility to make change in the world.
Okay. And how does the Beyond Animal platform function to accelerate the growth for entrepreneurs? And what gap in the market were you trying to fill when you co-founded it?
Yes, I mean, I will say that Beyond Animal is still on a journey in terms of really leveraging and capitalizing on the interest in veganism, the new vegan products, and the ecosystem which is required. But essentially, if you think about it, there is an existing system around animal usage, which has the complete supply chains, customers, suppliers, production facilities, communications, industry associations, lobbyists. And what I want Beyond Animal to do, and we were initially supporting entrepreneurs in funding. We were successful in that area in introducing entrepreneurs to investors. But there's a whole lot more besides that in terms of knowledge transfer, in terms of expertise, and in terms of getting people to work together to create that entire supply chain. And all of those stakeholders that I just mentioned in the meat industry need to be in place in the animal-free industry. So Beyond Animal being a connection platform, running online events that attract people to learn, but also then when they attend an event, that creates a profile on the platform, which means that other people can get in contact with them. And besides the funding side of things, we are also onboarding consultants now to be able to offer consulting packages and work on projects with large companies, potentially startups. But we really want our expertise to be available to people that are interested in this area and want to see how it could fit into their business. And so that's how that platform is evolving at the moment, to support founders in this space, but also just grow the entire industry.
Okay. You develop investment programs for both public and private markets. So where do you currently see the most untapped potential for sustainable returns?
Oh, for returns. Well, the return argument is always linked to risk. So the way, and when we started to design the products, we were looking along the risk curve, and our concept was that investors actually need, because of the way that they construct portfolios, they need to have products that go from low risk to high risk. If you look at any portfolio allocation, whether it be a pension fund, an institution like an insurance company, you will see that they have a certain amount in bonds, a certain amount in equities. Within equities, they'll have the largest cap companies, they'll have a certain amount in small cap companies, and then they'll have another allocation within private equity, and that may vary from private equity companies that are already cash flow positive, that are sustainable, and it's about improving the operations of the company, making them more profitable, or venture capital, which is obviously about creating new companies, growing them, but recognizing that for a period of time they will be unprofitable and they will need continuous amounts of capital to get them to a size where they are profitable. So you can see that from bonds all the way to these startup companies with absolutely no track record, which are unprofitable, there's a huge variation in risk. Now, within those markets, you have to look at the kind of pricing, as it were. So what pricing are bonds versus history, or equities versus history, and in venture capital versus history. Venture capital had a peak in valuation in 2021. Now it is really down at the lows, and the lack of venture capital that is available to founders is a real issue. And unfortunately, there are some very interesting companies that are going by the wayside because of a lack of capital, even if they may have a very good chance of being profitable in the next 2 or 3 years. So if you can handle the risk, highest returns are in venture capital, and particularly so given the cycle has really bottomed. But as with anything that's on the downward trajectory, you want to be sure that you've hit the bottom, that it's not going to go further down before you go into it. But it is important to invest through the cycle, and just because the valuations have gone down, that doesn't mean you should stop investing. If anything, you should be investing more with the valuations as low as they are now. So that is the most highly speculative. It definitely has the highest return, and particularly from the current low base. In our equity, other listed equity programs, particularly the large cap ones, what we're trying to do is more about providing people with a values-driven portfolio without increasing the risk materially, and whilst being able to track the stock market so they're not compromising on the returns. So it's not about high performance in those programs. It's more about how you adapt a stock market portfolio towards this cruelty-free philosophy, but you're not at risk of having very disappointing performance as a result.
Okay. For the startup founder listening, so what is the most common mistake you see them make, like when pitching to impact investors?
I think that sometimes it's important that they can show that there is impact, and they have properly research what they're doing, and can make create some data that shows that they are having a real impact. Some of the things that I've seen from founders are kind of like, well, this is a kind of nice to have thing, maybe get connected with each other, particularly with like apps and that kind of thing. But it's been very hard for them to demonstrate the actual real world impact. So the founders need to come with some hard data for impact investors to get them interested. Fortunately, in our space, the impact data is very, very clear that reducing the use of animals reduces carbon emissions, land use, water use, pollution, biodiversity is promoted, health risks go down, particularly things like cardiovascular. And this is something that we also report on by building that data from our portfolio companies and then looking at our fund overall to see what those impacts are. But the founders, if they are going to impact their investors, they need to have properly done research on their supply chain, where they're sourcing the raw materials from, what the cost of production are in terms of the environmental aspects, and also what the environmental issues are going to be in terms of selling the product as well, and do that entire life cycle analysis to prove to impact investors that they are doing something good for the world. So yes, I think that's the main thing in terms of impact investors, is that they have become much more savvy and they want to see data. It's not just this is a nice story and it sounds like it might have a nice outcome.
Okay. Given your engineering background, like, are there any specific new technologies in the plant-based or cruelty-free space that you find particularly interesting right now?
Yes, I think that we are within there's various segments within plant-based. Within the cultivated space, we have actively been investing for the last couple of years, but particularly in companies that can generate cost advantages by reducing their reliance on the most costly inputs to the process. And the big one that would be growth factors, which are made generally by pharmaceutical companies, and they charge an enormous amount for them. So we have avoided those companies where the growth factors need to be used, and we've invested in companies where the cells are spontaneously growing without growth factors. And also we've invested in companies who have identified other ways to activate cell growth without using growth factors. So that's one example. Another example in terms of fat, a lot of people are looking at different ways to create fat, which comes from animals currently, but a lot of those those fats can be generated either from plant-based, from precision fermentation, cultivation as well. But the cost of the very high-tech products is more expensive. We were interested in a company that was producing fat using various sort of mechanical means to change the structure of the fat. They're not changing the composition of the fat at all. So, and being able to use sort of healthier fats to make products that mimic animal fats, but by changing the structure of the fat, so that something that's a vegetable oil actually turns into a solid fat at at room temperature, and has that sort of resistance that you might find in a spread, as opposed to being just sort of dribbling around. So that's an area that we are interested in, is ways to use cheap inputs and apply a technology which does not involve large bioreactors, etc. So find cheaper technologies to achieve the same aims.
I have interviewed, I think, two startup. One is IO. They are making fats with the help of precision fermentation. They are using particular yeast strain, I guess.
Yeah.
And then another one is Savor. They are making fats, a different kind of fats or butter out of air. They are like using carbon. They're just rearranging the
I
molecules.
see. Yes, that's the bacterial, microbial, who are consuming the CO2 and creating, other products.
Yes,
I've heard of that in terms of the protein. I wasn't aware that there was one that was creating fats. So that's interesting to know.
And could you share more about the Beyond Cruelty Foundation and how your campaigning for zero animal exploitation complements your investment for?
Yeah, sure. Well, I mean, the idea, is that the investment business should be profitable, and the well, any business that is profitable on its operations, I think, should be contributing to society, not just through its operations, but should be looking for ways that they can donate to to support their work, especially if you are an impact investor, if your whole ethos of your company is around creating impact. And this is because, well, there are various levers to society. One being consumers, obviously, determines what consumers want, determines what is produced. But also what people are prepared to finance determines what is produced, what the impact of that production is. But the other key driver is also citizens. Citizens working together locally, government policies, and essentially one particular reason why animals are used in the way that they are is that there is one set of laws for some kinds of animals and another set of laws for others. The type of things that farm animals go through, you could never, well, you could do it, but you'd get arrested. You could never do to a dog or a cat without, being hauled up before a judge and accused of animal cruelty, and sent to prison or fined and probably prevented from owning any animal again. So there's this big disconnect. And the Beyond Cruelty Foundation is aiming to throw the spotlight on this sort of disconnect, and also demonstrate how the use of animals is undermining our environment, our society, and our economy in the way that society works in many, many ways. And this is why we have a campaign called SDG 18, which is trying to demonstrate that the original SDGs did not consider farmed animals at all. There are no goals in terms of improving their lives or any consideration as to whether this is a reasonable way to produce products that humans want. And yes, to show that the existing SDGs are being undermined by continued use of farmed animals. So trying to meet climate goals whilst removing all of the fossil fuel production is not actually going to be enough. So there needs to be this shift in other consumption patterns, and particularly food. And if you look, very good work is done by Project Drawdown on this area. And they've identified that, a plant-rich diet would be one of the top 5 contributors to reducing the climate issue, and also issues around food waste. And there's a lot of food waste within the animal industry, because to the extent that if any animal is produced, killed, sent to a supermarket, but it gets thrown out at the end of the day because there haven't been enough people buying meat, you're not just wasting that piece of meat, you're actually wasting all of the inputs that went into producing it as well. So all of the feed that the animal was given, the land that it was put on, the water it was drinking, all of that is wasted if at the end of the day that meat is not used. So yeah, this is a very important topic for things that really, threaten our entire civilization, i.e. climate change, access to water, pollution, so clean water particularly, and the ocean as well. I believe I've heard statistics around the amount of fish meal that is being given to pigs, which is an animal that would not normally, they live on land, they would not normally be eating fish. But this is because so much fish is going into animal feed and being fed to pigs. So yeah, there are some really bad things happening which need to be addressed. Beyond Cruelty is using its network, collaborating with other animal involved charities. We've recently joined the Eurogroup for Animals, we've joined the World Federation for Animals, and the idea is to collaborate with others globally that are working in all of these areas, but bring it together and show how all of these different aspects, the animal farming, the animal testing, the captive animals, the use of animals in entertainment, all of these things that we actually remove from our portfolios, we would not invest in. We need to show how this is undermining society by providing this information.
Okay. And what is your long-term vision for a thriving vegan economy? And what is the biggest hurdle we need to overcome to get there?
Well, yes, the long-term vision is to reduce the amount of animals that are being harmed significantly, and ideally to demonstrate to countries and peoples that are not necessarily big users of animals at the current time, or where it's much smaller farms, that the process of industrialization of animals, which is what has occurred in the West in the last 50 years, started in the 60s in the US, came to the UK in the 1970s, and that was something that really provoked my change to stop eating animals, was because I became aware of the practices, the type of things that they were inflicting upon animals. It was no longer the case that animals were living a kind of pastoral life, and then there was this one day, at the end of their lives when, when they were of a sufficient weight to go to the slaughterhouse, that was like the bad day, but their entire lives were just a cycle of suffering. That's what provoked me to turn vegetarian initially, and then vegan. So yeah, I want to be definitely a force in terms of reducing that suffering, and that involves people changing their diets and making the plant-based products more interesting, more appealing, more desirable, and also through the investing programs in the listed equities. If I can demonstrate that you can apply these philosophies and it's not harmful to your returns, that you can make as much money but without financing these damaging businesses, well, then there is no reason for investors to continue to hold those companies, and the selling pressure on those companies stops as investors divest. And this has already occurred in fossil fuel. There's been huge divestment programs there. I'd like to see the same in terms of animal industries, that investors stop investing in these industries, and that will make life harder and harder for them to carry on in business, and that will save animals' lives, frankly. So that's the end goal, yes. Cool.